Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Monday, November 8th. Great to have you with us. Thank you so much for joining us here today. I'm your host, Jesse Allen. MarketTalkAg.com. That's our home on the web. That's where you could find us. MarketTalkAg.com is the place to go. Keep up to date with all the latest in ag news, market information, listen back to past episodes, and much, much more. Well, we go into this week here. Got a big WASDE report tomorrow. Grains were fairly mixed. Wheat a little higher, beans a little lower, or well, I should say beans a lot lower. Corn was a little lower on the day today. Got plenty to talk about. Let's bring in John Heinberg with Total Farm Marketing. John, good afternoon to you, sir. And I wasn't too surprised with the market action here we got today ahead of this WASDE.
No, especially in that soybean market, the trend is obviously to the downside right now. We got a bit of a slippery slope. Pretty much the news is overall negative as you're looking at strong South American supplies. Demand's not quite there where we need it to be. And the fund sellers are just pushing this thing right now because the path of least resistance is to the downside. We'll see what the report gives us tomorrow. We're obviously seeing some probably step up in the carryout number. And that's why today we took out that October report low, and because obviously the supply is going to be bigger, we need to be below that point in that mind. So tomorrow will be pretty interesting. Maybe we've taken out too much air here. We'll have to find that out based on what the numbers put together. But again, typically with the USDA, there could be some surprises in here as we get ready for this report tomorrow.
Well, you mentioned that October low in soybeans and January beans closing below $12, first time since March. That's not a friendly thing to this market, especially on the soybean side. And I think about the talk of maybe more acres next year, the talk of a big South American crop, talk of some farmers selling not only here but South America. It's like you said, there's just a lot of negative to this soybean market. But one has to wonder, depending on the numbers tomorrow, maybe we've already priced some of this in. Maybe this was the squaring we needed ahead of that. It's a little hard to say. There's a few factors that could go into it, isn't there?
Yeah, there's quite a few. And realistically, this trend started with that grain stocks report at the end of September when the USDA found 80 million bushels on last year's harvest. Whether we're right or wrong, that's what we got. And the numbers are dealing with it. That's got the carry out growing. And now here we're expecting to see maybe a little bump in yield again tomorrow. We'll see what they do with the demand, which maybe they don't mess with it a whole lot here in this window. It's still pretty early, but right now we're definitely behind the eight ball, at least in terms of sales and shipments on the bean side. And then with a good South American crop starting to come together, they're in the fields early this year. They're probably going to have beans available for the export market by December, where last year it was almost February, which was some of the reason for our strength in that December-January window on beans market last year. So those things might be lacking this year. And right now, the path of least resistance, at least this stage, looks lower. We do have some pretty good support around 11.70 on the January. That was an area I've been kind of targeting. We might just hit that area and bounce because, like you just said, maybe it's all priced in and the market can come back a little bit, but I don't think we're going to be bouncing back to $12 plus $13 type window. It'll be a spot where we can just maybe correct back to the top of the range or the top of the trend line.
We look as well getting into tomorrow's report, this corn market, when the dust settled today, corn was down a penny, roughly. I mean, it seems like there's still plenty of support under this corn market, even though, we're looking to tomorrow's report and we're looking for yields to move modestly higher on the corn side as well. Talk about your thoughts with where corn is sitting heading into this November report, John.
Obviously a little bit of caution. We're 30 cents off the recent high here with the move in December, as well as that March contract. It's kind of targeting that 581, 585 area. We kind of bounced off that last week, and now we've been moving some money to the sidelines. It was interesting to see the commitment of traders last week and how aggressive the funds were. Picked up almost 80,000 contracts of corn to get back up to that 300,000 level. At least that's what we were estimating to be. So there was a little bit of room for them to take some profits out here. Now, here comes a report. We'll probably see some yield move higher. The question still going into this on the market side is what's going to happen with the demand. We've got great ethanol numbers the last couple of weeks pushing all-time highs on weekly production levels. You still got stockpiles on the ethanol front that are very, very manageable, showing us good demand. And with profit margins where they are, the ethanol side is going to be the strength in this core market. Do we see some grind up, in terms of the push up in the grind here tomorrow? Most likely, maybe enough to compensate for what we gain in yield. So we'll have to see how that plays out. I still think it's a little too early for the USDA to move the export demand numbers around, but we'll have to watch, obviously, what they do with the feed side of the equation and what do they do with this ethanol front. Now we expect carryout to probably stay pretty close to where we were in October, about that 1.5 billion bushel window. So if that's the case, a strong cash market like we're seeing has been supportive here. That's what producers keep telling me, that there's good basis out there. And now we're in the last probably 15% of the harvest here. At least that's what the expectations are for today's crop progress. So that's something I like, at least on this corn market, that can keep us pretty well supported here, and beans can move on their own.
Before we move to wheat, John, I want to look at this week's weekly export sales, and I know the numbers, they were okay. 22.2 million bushels of corn, 97.3 million bushels of soybeans, 8.5 million bushels of wheat inspected for the week. But in the grand scheme of things, it's just not enough.
We're not there yet. We still got a lot of work to do, especially in beans, as I was talking about. Sales on the books are about 10 million metric tons under last year. And even with that shipment number, even though it's a solid number, we've averaged about 2.5 million metric tons the last 4 weeks. That's still below last year's average in the same time window. And then the big concern, like I said earlier, those Brazilian beans are coming early. And last year we had the market to ourselves till about February, where this year we're going to be competing on an earlier window. We need a longer tail on that export inspections number as well as the sales number, and I'm not just sure it's going to be there. So that makes me a little bit cautious there. Corn, like I said, we still got some time. We're still looking at a global supply that's still going to be relatively supported and stays us on the tighter side, at least until we get into that Brazil and South American crop later in the spring, and that should help out the U.S. corn price, at least keeping us supported in here. Not that we still can't slip lower, but at least it'll be a grind versus maybe a plummet.
Let's talk the wheat market, John. And today, wheat was a little bit higher. We diverged from corn to beans ahead of this report tomorrow. And a lot of talk on this report is that probably going to confirm just how tight the supplies are for good quality milling wheat globally. I look at the wheat markets here. I wonder if that can give us some strength tomorrow. One thing I saw today, though, that maybe you could talk about a little bit, if it correlates at all, was the big drop of the oat market. And I wonder how much that could tie in with wheat today.
I think that old market's got to the stage. It's more speculator driven than probably fundamentally driven. And you're just seeing the traders pop in and out of that. Look at the volatility we started last week with some of the swings. I know that one day we had like almost a 40-cent swing in one day. That just tells you that probably getting to a top, the volatility is extremely high, and you start seeing wild swings in price like that. Again, just a signal that the speculators are jumping in and out, trying to figure out where to go. So maybe that oat market's finding its peak. Bring that over into the spring wheat side. We got over 10. We pushed to the 10, 30, 40 window last week. Now we're holding in that $10 window today. Maybe we're getting a little bit fairly priced between those two at this time frame until we do get some numbers tomorrow that could reflect where we truly could be on that supply. But that oat market, again, is so thinly traded. Does it bring a little momentum? Maybe. I think it did on the upside, but I think right now they're starting to maybe break that away as its own story. I'm just not sure that a strong oat price is going to buy that many acres versus a wheat crop that we also have tight supplies and good value in.
What about Chicago KC wheat? We were a little higher there. I know we're looking at maybe some dryness issues in the Southern Plains. Talk about what you're seeing in those two wheat classes right now.
We had a good run and the charts pulled back like we saw in the corn market the last few days, probably squaring up for tomorrow. We'll see what those numbers give us. Expected total wheat carryover about 560 million bushels, pretty much in line with the October report. So tomorrow's numbers are going to be more based for probably corn and soybeans overall, but except we'll see what the world has out there for wheat. The charts I think are very well supported. We got a nice trending upward chart here at this window. It's just a matter of, had we bought the acres compared to corn? We'll see where that kind of plays out. Obviously, keeping a close eye on the weather and what happens in the U.S. wheat crop as we move forward. But again, it still feels like a chart that's got some support underneath it here. Again, it becomes a global story to me, a little bit more tied to food inflation and things of that nature. Bread equals flour equals, or excuse me, wheat equals flour equals bread, and countries are looking to lock in food stocks. And that's another reason why wheat, as well as that corn market, seems to get a little bit more support versus the oil side for soybeans, and maybe be more tied to feed side with some of that soybean meal.
John, as well in the outside market picture, I want to talk a little bit about South America. I know you mentioned to me before we jumped on the air some of the issues with the Brazilian real. Talk about the latest you're seeing with that and how that could play into our commodity markets here in the U.S.
There's a pretty good correlation between the movement of the real versus the dollar and what happens in soybeans. As you kind of look at those two charts, when we kind of peaked in the summer is when the real peaked against the dollar as well. It's been on a steady downward move as the dollar's firmed up here over the last handful of months. Getting a little correction back maybe today as the weaker dollar kind of jumping out today, especially with that the passing of the infrastructure package on the overnight. So we'll still have to watch. But what that basically does, it makes Brazilian beans more available to the rest of the world. Same time provides premium for the Brazilian producer to sell those beans. And I think that's some of what's weighing on the bean market here as well. As we know those supplies are coming in early, and the Brazilian producers are moving beans out of storage to get prepared for the new crop coming, which they could be harvesting as soon as a month from now. So that's something that's also being a factor, I think, of that bean market, is just some hedge pressure or selling pressure from the South American producers.
It'll be interesting to see how that South America crop does come together again. It seems like the stars are aligning down there for them to have a big crop here, at least this first crop. This is going to become more of a focus here. To me, I feel like we got the WASDE report tomorrow. We get that in the market. We digest it. We trade it maybe for a couple more days this week. And then I think we turn the attention here. I think we will turn our attention more to that South America weather and that crop's influence over our markets as we wrap harvest here the next week or two.
Very much so. I mean, obviously those conditions are looking very, very good. The planting pace is strong. The leading state, Mato Grosso, I believe was pushing over 80% complete on the planting side, as well as good conditions, as well as getting decent moisture, at least to start things here this fall for them, or their spring in this window. My biggest fear, and I don't want to be doom and gloom on beans because it's a bean market that can move quickly, is if you see a jump in demand because prices have come down, things can change very fast. I mean, think about just what we were talking about 2 months ago, how tight supplies were, and all we did was find 80 million bushels on the stocks report, and now the whole picture's totally changed. But if that demand picture doesn't clear up and that South American crop continues to come together and we see that demand stay out of our way and stay in that South American, based on that harvest, we could be looking at the 1st of March at 600 million bushels of U.S. carryover with a record Brazilian crop getting harvested. That just doesn't look very good for prices in this time window.
John, let's talk livestock. Let's move our conversation over there. Cattle last week, we got some good cash action. Feedlot country, basically, we saw a couple dollars higher really across the board, and it seems like the trade is maybe indicating that we're going to need that, or we're going to see that again this week, maybe at least $1 or $2. What are your thoughts with cattle as we start this week?
Yeah, it was really nice to see a nice little bump in cash. We've only been kind of waiting for that for about 5 months, it feels like, here, just to get some type of movement in that cash market. Now the concern, I think, is how long will it go? And realistically, today's price action was extremely quiet. I'm kind of focused more a little bit on that February contract. Got some pretty good resistance around this 137, 50, 60 area, kind of a top trend line of this little up channel that we're building. Prices really didn't get through there very well today. So maybe a little bit of a wait and see. Let's see if we get another $1 or $2 in cash this week. And then we got a reason to push this higher. The other thing I'm really watching in the cattle side is where's the retail demand go? You go look at the grocery store right now for the consumer. Retail beef is the most expensive. It always has been, but it's right now the retailers are moving out some of those expensive beef cuts they bought back in July and August when retail values were extremely high, and it's not comparable to pork and poultry at the retail case. And if the American consumer is dealing with inflation dollars, beef demand at the consumer level could be pinched. So that may be enough here that keeps this market a bit in check in the shorter term. So we'll have to watch it. Today was kind of one of those days I was waiting to see if we get some follow through energy after a pretty good close of the week last week, and it just didn't show up. Obviously, too, the report tomorrow, if we get a big break in grains, that'll be supportive. That'll help out that feeder market, which the charts actually look a lot more improved than live cattle does overall. So we'll just have to watch how things play out. But like you said, though, the direction of the week is going to be what happens in that cash market. And if it disappoints this week, we're at a spot I think we could see some selling pressure kick in, not washing us out or anything, but at least moving us back down to the bottom of the range, $3, $4, $5 lower.
I look at how Packers committed their cattle. I think it was like 90% for nearby delivery, 10% for deferred delivery. So to me, that little nugget almost makes me feel like even if we get a little bit of pressure, it's not going to be that bad this week. And in fact, it makes me a little more friendly here this week on the cash side, John.
I agree. They were probably a little bit on the short bought side going into last week, so they had to bid up a little, maybe trying to play the market themselves with the end of the month and things of that nature coming into play. So we'll have to see where things go. I expect trade to probably hold off towards the second half of the week. We'll get through the report, make sure there's no surprises from the USDA and some projections there, even though the livestock numbers aren't the key in that report, but they put some baseline numbers out there that the market pays attention to. And then again, we'll see where this cash trade wants to go. Wouldn't surprise me, we stay firm as we move into December, and then typically we hit that seasonal peak, especially as we kind of get through the seasonal holiday demand.
And lastly, on the hog market, John, it just still feels like we're just kind of trying to hone in on our trajectory here. It's pretty cautious. I mean, we were a little bit lower today, but really, it just kind of feels like we're walking on eggshells a little bit in this hog market right now.
Right now we're building a bit of an uptrend again. We come off that 72 low in December. In the last couple of times we've done this, we've had a little pullback and correction like we just saw at the end of last week. So at least we're building a bit of an upward path. Now, why that could be supported here, let's go back to that quarterly hogs and pigs report. We could see slaughter down 5 to 6% in the month of December compared to last year due to hog numbers. So that's something that might still build a little bit of support under the market. In fact, even today, though, you're looking at the index at a premium still over top that December contract. So that at least keeps some support in. I was kind of targeting maybe that February contract getting back up into that 83, 82, 84 window. And then we'd have a lot of resistance there. So we'll have to see. It's going to be choppy. Again, it might be based on news on a daily basis. The cash market still is going to be king there. And that still hasn't really found the footing. Now we're maybe got cash prices back to historical averages. So maybe that will help build a little bit of just base underneath that market. And then it comes down to the demand and where the slaughter pace goes going forward.
John, great stuff as always. Any final thoughts about tomorrow's WASDE report or anything else before we run out of time?
I know we've taken a lot out of that bean market. That market does scare me the most right now, just because of how quickly funds can push beans around. If you're going to be moving some beans this fall, maybe make sure you got some protection underneath. At least the December options tied to January are fairly reasonable. I'd rather have a put sit down there and go worthless and us rally 50 cents on some friendly numbers versus a washout. I was targeting 1170, but if those numbers come in heavy, there is some whispers of 400 million bushels on carryover. That's still going to be keep our prices are still going to be overvalued based on that type of supply, especially with that South American crop coming. So hopefully I'm wrong. Hopefully we got something friendly tomorrow and the market sees some bounce back. But I'll tell you right now, at least in my mindset, any strength that we do have probably turns opportunities for producers to get some more beans on the books all the way out into 2022.
John, great stuff. And I know if producers need some advice, they can reach out to you and the team there at Total Farm Marketing, can't they?
Love to chat with them anytime, Jesse. Feel free to give me a call, 800-334-9779. Feel free to shoot me an email at johnh@totalfarmmarketing.com. And again, don't forget about that website, totalfarmmarketing.com. I believe we got another webinar set up for tomorrow after those reports come out. So feel free to sign up for that and get some information.
John, appreciate it as always. Have a great week, and we'll talk to you next Monday.
Sounds great. Have a good week, everybody.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great rest of your day.